Hey, it's Stuart with Signature Real Estate Group with your monthly market update for June 2022. So I think the days of the homes hitting the market, having multiple offers over asking price within a few days, and in some cases within a few hours, are over. You see, interest rates are now around 6% as the Fed continues to raise rates. Buyers' demand is slowly going down, and more homes are producing their prices, and more homes are hitting the market. And this seems to be the trend over the last few weeks. And there are even whispers of a recession coming. Because of rates, because of the economy has been doing so well for so long that we're due for a market correction, and because inflation has run rampant as gas prices, food prices, and pretty much everything else has gone up. But I wouldn't panic about it just yet, and here's why. You see, the Las Vegas real estate market will take time to shift. It's not going to happen overnight. Every time the Fed announces they'll be raising rates, buyers that need to buy will generally keep doing so and even enter the market and buy faster before rates rise. And those that don't need to buy, they may opt out. That is if they can afford to do so. They have to take into account that rent prices have also gone up, so what is the cost of waiting? In short, we're shifting to a more balanced market, meaning homes will take more time to sell instead of selling within 2 weeks. They may sell at list price, even sometimes below. You see, what we're used to experiencing over the last 5 years was a historical hot sellers market that simply could not have been sustained in the long run. Thus, we're now shifting to a more balanced, normal market, which is healthy. I believe we'll still see strong buyer demand coming from California and other places where it's more expensive to live than Las Vegas as the cost of living rises. This will help combat the loss of buyer demand from rising rates. More homes on the market is a result from those homeowners who are waiting for their prices to continue to rise before going on the market, now realizing it's not going to be the way it was before, so now they're putting their homes on the market, trying to get the most they can out of it before the values start to reflect the shift in the market. I mean, just last month, inventory rose by 40%. That seems like a lot, but you have to remember that this is an increase from around 3,000 homes to 4,500 homes, which is still very, very low for this inventory compared to where a balanced market should be. Higher interest rates means that buyers have to reassess whether they want to buy or they want to wait for lower pricing in the distant future, and what the cost of waiting could be for them since rates have gone up as well. You have to remember that the interest rate for a rent is 100%. Those that need to buy will consider buying less expensive homes, so the payment will stay the same despite the higher rates. For example, let's take someone shopping for a home, $650,000 around Summerlin 1 month ago. If they haven't bought anything, now they may be considering $550,000 home in the Southwest instead. Most buyers have had their purchasing power shrunk due to the higher rates, causing many of the entry-level buyers to fall out of the buying market. If you're buying at $650,000 and now looking at $550,000, you still have lots of options and more options coming out. But if you're buying at $350,000 and now you're looking at $300,000, there weren't very many options to begin with, and aside from getting a townhouse or a condo. But those buyers have fallen out of the entry market in some cases. The current average home prices, if you took a sample size of 2,000 homes that sold in the last 25 days, is $595,000. So entry-level buyers didn't have too many options to begin with. But moving forward, they now will. There are still homes at every price range. It's just a matter of buyers figuring out what they want, what they need, and what they can afford in order for them to be happy with their home purchase. There will always be homes for sale and always be people buying homes, is what I'm saying. Price reductions and increased days on markets are starting to become more common because homeowners are starting to realize that this isn't the market from a few months ago. It's not going to be as crazy hot as it was back when rates were 3.5%. Many of these priced homes were really high priced to begin with, as they were trying to take advantage of that unsustainable hot sellers market. Thus, now they're reducing prices to where it should be in order to get it sold. So all these small shifts are indicators of where we're headed, slowly moving into a balanced market, and it will take time to do so. If these trends continue, then we may see a balanced market as early as the beginning of next year or midway through next year. But that can all change drastically depending on how high, how quickly, and how often the Fed will be raising rates. In the short term, as now, I believe prices are still going to jump up a little bit in the next 1 to 2 months. But in the long term, I think we're going to see a balanced market is where we're headed. I'll keep you updated on any other changes in the Las Vegas real estate market in next month's video in July. Always, it's a pleasure. My name is Stuart Carrion with Signature Real Estate Group. If you have any questions, just let me know. You can text or call anytime at 702-577-5175. Thank you for watching. and have a great day.